traders, and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. President-elect Donald Trump has threatened the European Union with tariffs if its member countries do not buy more American oil and gas. Now, the EU is already a major buyer of U.S. liquefied natural gas and has discussed purchasing more to deter tariffs. Let's get straight to Bloomberg's Oliver Crook, who's, of course, looking at it from the EU side. So, Ollie, is this good news or bad news for Europe?
Yeah, Francine, it all feels very sort of 2018, doesn't it? I think it's both bad and good news for the Europeans. I mean, I think it's bad news from the perspective that we're getting major sort of policy initiatives at 1:08 Eastern time on Truth Social, and that is something that obviously the Europeans and other countries are probably not going to be too pleased about. Where it's good news, Francine, is that this is basically beginning to sketch out the position of what Trump wants in return for not imposing tariffs, right? And that is, as everybody will see it as since the very beginning, the beginning of a negotiation. And what he wants is basically Europe to buy more natural gas, to buy more oil from the United States. And there's even more good news there, right? They're already doing that. They've almost tripled their LNG imports from the United States since 2021. About half of the natural gas in Europe now comes from the United States. So all of that is basically moving in the right direction. And you can add to that, too, some news that we got over the last 24 hours that Ukraine will basically discontinue its gas transit deal with Russia, meaning that about another 8% of all the European gas that comes still from Russia, that is no longer there. That's 15 billion cubic tons of gas that will have to be filled in. That could potentially be filled in by the United States. Again, good news and potentially some goodwill that they could get with the president-elect of the United States.
Ollie, thanks so much. Oliver Crook there in Brussels. Now, the Republican-led House has voted down a temporary funding plan backed by President-elect Donald Trump. The rejection, of course, sets the stage for a potential U.S. government shutdown with funding set to lapse Friday night. Now, let's get more with Bloomberg's Joshua Galou. So, Joshua, I mean, this failed for a number of reasons, but how dangerous is this?
Well, look, it's certainly not the first time that the government would shut down. There have been more than 20 instances from since the 70s. It's a very dysfunctional budget process. But the key here is, you know, in 2 weeks, time, it's less about the actual impact of the shutdown than it is about the signs that we're seeing about a good process going forward, and also a sign about President Trump's power within his party. So he's asked for this debt limit to be raised, as you know, for 2 years. This is something that actually Democrats have fought for in the past, and it's made clear a big rift in the Republican Party, because you have the conservatives who never support such a thing and won't vote for it. That means they're going to have to work with the Democrats because they won't have enough votes to pass anything. At the same time, this could jeopardize Trump's biggest agenda items. He wants to make permanent his tax cuts that were there in 2017. They're set to expire this coming year. That's a major piece of legislation, plus border security spending. There's trillions of dollars the U.S. is going to need to be able to increase the debt limit to service his agenda. He's going to have to build a coalition. It's going to be interesting to see how that plays out.
So, Josh, I guess, how does it play out? I don't know exactly what happens next, if we will have a deal early next year, if it could come sooner. But is this also a template of things to come under the Trump administration?
It seems like a template of things to come. I mean, the way this, plays out in terms of calendaring, the government is poised to shut down tonight at midnight if a deal isn't reached. And then it'll stay shut down until they actually reach a deal. That, when they do, that only provides for the government to continue spending at current rates for 3 months. So it'll have to be readdressed, either another continuing resolution in 3 months in March, or they get back into an omnibus budget discussion, which also has to happen. So there's that piece, but there's also overlying that is on January 1st, the debt limit agreement expires. So it would either have to be suspended again before then in this deal, or at that point when it expires, the U.S. will have to finance itself on emergency funds through the Treasury. That is expected to run out in summertime. So a big debate about the budget is going to last for several months here.
Joshua, thank you so much. Joshua Galou there with the very latest, of course, on what's happening in the U.S. Now, markets turning their attention to the U.S. PCE inflation data out later today. It's the last major piece of data for the year and follows the Fed's latest hawkish policy pivot. We're now joined by Laureline Chatelain, a fixed income strategist at Pictet. Laureline, thank you so much for joining us. It's been a big week, certainly when it comes to treasuries. How do you see the government shutdown also playing out in some of the concerns when it comes to U.S. debt?
Thank you very much for having me. So I think if we look at U.S. debt, I wouldn't say it's a short-term concern. The movement we've seen on treasury yields this week have been really linked to the Fed and to this change in terms of projection, this hawkish tone that says that basically they are ready for a pause and that they have revised quite sharply up the expectation for core PCE, encompassing potentially the effect of future Trump policy. So I would say for now, the treasury market is more focused on the Fed and what it will do next than short term on this budget funding in the U.S.
Laureline, there's a lot of concern, actually, when it came to that hawkish messaging from the Fed. Are they just getting positioned because they don't really know what the Trump administration brings in terms of policies, or is it really difficult to get inflation down in the last mile?
So it seems when we read the minutes and also from the press conference that some members at the Fed did actually put revise upward the expectation in terms of inflation linked to potentially the effect of tariff or a reduced immigration that could also boost the labor market and wage growth. So it's not clear if it's really the core PCE data that we have had over the past months that was a bit stronger at 0.3 months on months. Or if it's really much what the participants expect for next year with Trump.
So, Laureline, what's your take on how do you build your portfolio around fixed income?
So looking at the yields movement we have seen this week, honestly, we believe that the 2 to 5 year part of the U.S. Treasury curve is now very much more attractive. We're getting yields that are close to the mid-Fed fund rate. And when we look back at history, that was the case only in 2022 when the Fed was hiking. So unless we go in for a scenario where the Fed is hiking next year, which we don't have, we see some further cuts. We believe the good carry we get now on the short to mid part of the Treasury curve is very attractive.
What would it take, actually, for the Fed to have to hike rates? I don't know if inflation has to really shoot back up or whether there's a base where, because of immigration, taking some of the workforce out in the U.S. or trade and, trade wars and extra tariffs really could make that a 20% probability.
So I guess you need to look at what they project, for example, for core PCE. So they have 2.5 for 2025. That has been revised up from 2.2. They have 2.2 for 2026. That means that they are already putting in their scenario the fact that they are not going to get back to the 2% target that they have over the next 2 years. So in this sense, I would say the risk is more on a downside surprise on core PCE than an upside surprise. But obviously, to your point, if it really surprised higher than that, we could well consider maybe hikes, maybe 2026 more than next year.
Laureline, thanks so much for joining us. Laureline Chatelain there from Pictet stays with us. Now, a couple of corporates we're also watching out for. FedEx shares higher pre-market after the company said it plans to spin off its freight division into a separate publicly traded company in a deal that will streamline the parcel giant. 8% higher for FedEx pre-market. Also, Nike, the world's largest sportswear company, reported revenue, profit and gross margin that surpassed analyst estimates in the last quarter. But the sales slump that began under the previous CEO, John Donahoe, has persisted. Nike down 4%. Coming up, the pound declined after the Bank of England held interest rates, but with a pretty dovish vote split. We'll discuss the outlook for the UK next, and this is Bloomberg.
Course of interest rates, the path is downwards, but there is more uncertainty around, and so we had to weigh that up very carefully. And I think the appropriate thing to do at this meeting was to keep interest rates on hold, but we'll come back at the beginning of February for our next meeting and start it all over again and review the evidence. But I think the fact that there is a difference of view within the committee, I think, first of all, I think it underlines the strength of that process. There's no groupthink on the MPC. Reasonable people can take a different view at this point, and that's exactly what they've done.
Well, that was the Bank of England Governor Andrew Bailey speaking after the central bank held rates yesterday. Let's also dive deeper into the latest market moves. We're joined by Sonali Punhani, UK economist at Bank of America. Sonali, thank you so much for joining us. I mean, it was quite a week. We're joking around. We've said that it's been quite a week in terms of market pricing for the BOE, but also just trying to understand how they'll react to the Fed. I mean, I guess the biggest question for next year is the UK actually going to be headed for a recession?
I mean, we don't think so. We still have growth picking up into next year, mainly because of the fact that we're getting a lot of fiscal easing. I think the composition of the economy is going to change a little bit. So obviously, you're going to see some weakness in the private sector as they absorb some of these employment costs that are coming as a result of the budget. But we do think that the public sector is going to take a large part of the growth engine into 2025. And we see some growth pick up on the back of higher public spending, higher public investment, kind of compensating for maybe some of the weakness that we see in the private sector and in consumption. So, I mean, the outlook is that growth should pick up. Also, consumers are likely to continue to see, their real incomes continue to grow. The impact of rate hikes are behind us. We are going to see some easing potentially, maybe slower than other central banks, but still see some easing. So that should support the economy. But obviously, risks are to the downside. We've seen what the data has been doing in the last few weeks, so we have to be cautious going into next year.
And so, I mean, a lot of uncertainties, right,
Yes.
about some of the, I guess, assumptions that we're making now.
Yes.
Is the fact that, we don't really know how companies will respond, as you rightly say, to this rise in payrolls tax. Is that the biggest one? And when do we know? Is it, a beginning of 2025, kind of second quarter, early second quarter, or do we need to wait until the middle of the year?
I think we are already getting some evidence. The bank has been doing surveys in the ground trying to ask companies what they're going to do, and companies are giving a mix of responses that they could either raise prices, that they could either lower some of the wages or reduce employment. So we are getting some evidence. Obviously, it's not clear yet. There's a lot of uncertainty. I would assume that, as we head more into the first half of next year, we get more evidence. April is when these payroll costs really hit, the company's accounts. So I think by then we should have a good idea about how the companies are planning to respond to these employment costs.
I mean, the easiest question is basically what impact will Trump have? I mean, it's impossible to game, right, at this point.
It is very hard. I mean, the thing is, one thing to note is that the UK is a services-driven economy. A large part of the exports to the US are in services. And so while there would be sectors in the economy that might be potentially impacted negatively by the Trump tariffs, the impact on the overall economy might be muted by the fact that we're exporting a large part of our exports to the US are in services. So relative to what maybe the impact might be on Eurozone, the UK is probably a bit better sheltered. But UK is still an open economy. If there is global slowdown in China and slowdown in Europe, that's going to affect us. And we did see the governor allude to that. Obviously, they said that the impact would be known only in some time. But things like trade policy uncertainty indicators are picking up, which is something that could also be weighing on sentiment at this point.
So now let's also bring in Laureline Chatelain, fixed income strategist at Pictet. Laureline, when you look at, you're in your space, basically in your world of fixed income, what do you do with gilts at the moment, given all of the uncertainties?
So the gilt is an area of the market that we actually like. So we are neutral overall on gilts, but it's true that we see some signs of inflation potentially coming down next year. We do expect the Bank of England to cut rate more aggressively than market participants currently expect. So we have 3.5 as a terminal rate for the BOE. So that could bring yields lower in the UK.
Laureline, we were talking with Sonali about some of the things that, we're watching out for. How difficult is it to know the Trump effects? And again, this could, I guess, start a major repricing amongst fixed income away from the U.S. I mean, there's a belief that the U.S. will kind of manage, but the rest of the world could really be hit.
Yeah, so it's all about this policy rate divergence that we could see, actually, because when you think about it, tariffs are indeed inflationary for the US if the US impose them on other countries, but that's actually potentially reducing economic growth in the countries that are hit by this tariff. And in that sense, I really think about China, for example, or Europe. And there we could see more monetary easing from central bank, whether it is the PBOC in China or the European Central Bank in Europe. So that could bring a strong yield divergence with higher yields in the US and lower yields in China and in Europe.
Sonali, where do you think rates will be at the end of the year? Next year.
We are forecasting 100 basis points of cuts into next year. So we think that the bank would, cut rates gradually. We are aware of inflation persistence risks that the UK is facing. So as a result, it's going to be a gradual cutting cycle. We don't really share some of the very deep concerns that some of the dovish members have about growth slowing down very significantly and the labor market cracking very significantly. So we think that it's going to be a gradual cutting process. But, as was alluded, I think the markets have gone a bit too far in terms of pricing out cuts in the UK. There's barely 2 to 3 cuts priced. So maybe that's going to be a bit of reprisal on that kind of cutting path as we get more and more data going into next year.
What do you think is a plausible range for the neutral rate? Because I stopped asking what the neutral rate is, but is it between 3 and 4%?
Yeah, I would think that between 2.5 to 4. I know it's a very wide range. I mean, I do think that there are evidence that neutral rate potentially is higher now in the UK relative to a few years ago. I think the inflation persistence story would mean that we need higher policy rates at this point to keep inflation at the 2% target. And then we obviously have an additional fiscal easing, which is also inflationary. So I think all of these measures means that we are not going to go back to where we were prior to the pandemic and be at potentially higher terminal rate relative to what we were in the past.
And Laureline, I mean, January, February is going to be a big months also for France and therefore French bonds and also Germany. How do you play Europe right now?
So it's the part that we prefer in the market. So we overweight European sovereign bonds. You're right to point that there's still a lot of political uncertainty in Europe, in Germany, in France with this new government that we expect, and in Germany with the election. But when you look at the broader picture in Europe, we have had good sign in terms of inflation this week. We know that growth is rather on the downside in France and in Germany. And so the European Central Bank potentially have room to cut below neutral, which means that they become very stimulative.
Thank you both for joining us today. Laureline, Chatelain, there, fixed income strategist at Pictet, Sonali, Punhani, UK economist at Bank of America. I hope you're winding down. I feel like, the market, there's never a good time to wind down for the markets because there's so much going on.
Hopefully we get a quiet couple of weeks.
Hopefully. Now, we'll have plenty more, of course, on the markets, on the Fed, and on Donald Trump next. This is Bloomberg. Welcome back, everyone. Now, federal prosecutors in the U.S. have charged Luigi Mangione with the murder of United Health Group executive Brian Thompson. Now, the 26-year-old's lawyer said the charge is a sign that prosecutors may seek the death penalty. Mangione allegedly shot Thompson from behind on a street in Manhattan earlier this month. Now, Starbucks barista union says it plans to go on strike for 5 days from Friday across stores in Los Angeles, Chicago, and Seattle. The group says the decision comes after the coffee chain presented a package that offered no immediate raises for baristas. Now, the union expects the strikes to spread to hundreds of stores by Christmas Eve. And Bloomberg has learned that VW and labor leaders are moving closer to a restructuring deal without shuttering factories in Germany. Now, sources say management is willing to keep plants running and reinstate job security agreements until 2030. That's in return for workers foregoing bonus payments. An agreement would prevent widespread walkouts and hand the chief executive, Oliver Blume, the fresh start he's seeking to turn around Europe's biggest carmaker. Coming up, President-elect Donald Trump threatens the EU with tariffs unless it buys more American oil and gas. Well, we'll discuss U.S.-EU trade with Ilham Kadri, the CEO of Syensqo. That exclusive conversation is next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President-elect Donald Trump threatens the EU with tariffs unless its members buy more American oil and gas. Meanwhile, in Washington, a U.S. government shutdown looms after the Republican-led House rejects a temporary funding plan backed by Donald Trump. And investors wait for the Fed's preferred inflation gauge, the last major piece of data for the year after the central bank's hawkish pivot. Now, U.S. President-elect Donald Trump has threatened the European Union with tariffs of its member countries do not buy more American oil and gas. Now, for more on the EU's trade pressures, I'm joined exclusively by Dr. Ilham Kadri, the CEO of Belgian chemicals company Syensqo. With a market cap of around 7 billion euros, it was formed by spin-off from chemical manufacturer Solvay last year and makes specialty chemicals used in the production of everything from airplanes, electric vehicles to mining and oil production. So, Dr. Ilham, thank you so much. This is like an annual occurrence.
Yeah.
So you've had a very busy year. Oh, yeah. There's been a lot going on. What do you think has been your success rate so far? I know you've done a lot. You've also pivoted to green.
Well, thank you for having me, Francine. Yeah, I was here a year ago, just when we spun off our company. So I'm very excited. We just celebrated our first year anniversary, up and running. It was a startup, 7 billion market cap, as you said. 13,000 people around the world. So here we are with a solid balance sheet. We delivered the cash we committed to, and we show to the world that we can launch IPO separate, specialty company devoted to grow, to innovate at the service of lightweight, electrification, connectivity, and biotechnology.
Where does actually chemical and chemical makers sit? We're speaking also this week to the people that bought Covestro in Germany.
Yeah.
I mean, this really seems to be like a new frontier of how to do growth. Yeah. But with that comes a lot of trade concerns and possible tariffs.
2024 has been a very soft year for the chemical industry in general, and most of the stocks are undervalued if you look at them. But the reality is that there is no strong economy without a strong industry. And there is no strong industry without strong chemical industry, because we are the mother of all industries. We are invisible, but we are in your car, in your chips, in your bio shampoo. So you need chemistry specifically to actually manage the energy transition, right? To manage the green, and electrification and connectivity. The world needs more and more. So yeah, it has been tough, but at the end of the day, companies like ours, like Syensqo, is actually ready to engage with growth opportunities, right, which are offered by all those megatrends.
The concern amongst a lot of European CEOs is that we don't have an industrial plan.
Yes.
Even UK CEOs.
Yes.
Do you see that coming as, again, Europe has to face the threats of Donald Trump?
The big elephant in the room in Europe is a lack of competitiveness,
right,
with two formidable regions called USA and China. Right? So, yeah, obviously, the new Trump administration, nothing is surprising. It's going to be extremely efficient and aggressive, right? Wait and see. I mean, let's see how the tariffs are going to be, applied and executed. But Europe, it's a moment of truth for Europe. It's about Europe going from European with an ambition to be to the ambition to do. The Draghi report is out. The chemical industry, we were 73 CEOs gathering in Antwerp in Belgium back in February, making a cri du cœur, a call for action. Now there are 1,280 signatories for that declaration. And that declaration is very simple. We need a single market. We need a level playing field, because Europe is asking for more green solution. And by the way, we need demand for the low carbon solutions. And we need less bureaucracy and more simplification amongst other, policies, which has to happen. So it's time for action.
Well, do you think that will come? Again, the Draghi report asked for 800 billion euros. A lot of questions of where that came from. And I think after a couple of hours the report came, certain member states said, oh, that's impossible to put together.
Yeah, I know. It's tough. But at the end of the day, Europe is in a tricky situation because for us, we need energy. And the energy prices are much higher than in the US or in China. So we need that support and then infrastructure. Do I have hope? Hope is not strategy. but I'm optimist. And Ms. President Ursula von der Leyen has named Stefan Sejourné, by the way, Commissioner on the Clean Industrial Deal, right? So, yeah, we have high expectations, I would say, that now we start executing to support the European industry. Now, for my company, I must say my demographics are a bit different because 41% of my revenues are in the Americas, and I'm very bullish about the U.S. and stay bullish about the U.S. 35% in Asia, my smallest region is in Europe. But listen, Europe has to stand up local for local and support its industry.
You're also the president of the European Chemicals Association. What's the right way in dealing with Donald Trump as we, start seeing how he expresses them on social media? I don't know whether that's policy or tactic.
Yeah. Well, listen, I'm the president of the European Chemical Industry and incoming president for the global, Chemical Association in January. So our companies, our members, are very global companies, right? My company, as an example, Syensqo, is acting local for local. Obviously, if there are tariffs, they will impact the flow of goods, imports of materials, exports of finished products. So we are planning for this, right? If it doesn't work well, it means increased prices, and with inflation, it can hit the consumer, spending and consumption. But at the end of the day, I really believe any administration would like to see a balance, right? Balancing acts, and that's what we expect. So what we expect now is that the authorities, they give us visibility about what's going to happen. Lack of visibility is not good for business.
I love how you put it, that you're, the silent motor of a lot of companies.
Yes.
Because you're everywhere.
Yeah.
And not many people know about enzymes and things like that. I mean, it's also transportation. When you look at your supply chain, what do you worry about the most for 2025?
Yeah. So, I mean, first of all, for my company, 2025, we are, for example, in the business of sustainable aviation. And people, that's the business which grew most in a soft 2024. Very, very, excited about our world-class composites material. They make your aircraft lighter. And this is booming. There are 15,000 aircraft in the order book, right? It will take 10 years to build them with the build rate of 2023. So there is an opportunity for growth in lightweight material. We make your car, your e-bike, your aircrafts lighter. There is more demand for the energy transition solutions, right? So I'm very excited about those. But again, I've never seen in my 10 years of being a CEO the geopolitics blurring with the economics as they are today. And that lack of visibility, this is what makes investors and business, community a bit skeptical or in the wait-and-see mode. And that's what we need. We need that clarity. But for our business, we have a strategy of local for local, and it has been working for us very well.
I mean, does the lack of visibility mean that there's less CapEx spending? Can you feel it, basically, in the investments?
If there is more bureaucracy, if there is lack of visibility from the environment perspective, from the permitting, like in Europe, there will be more CapEx flowing into the US, and IRA has accelerated some of it, right? So that's what we need. We need to align with the authorities on the how. They need to engage more with the business community and have, a favorable, economical friendly, environmental friendly environments with visibility to be able to invest in.
But Dr. Ilham, where do you stand on, a lot of concern is coming from the fact that maybe there's a retrenchment when it comes to green policies. I mean, we're even talking about not being sure whether the US sticks to the Paris Accord. Does that change business views?
But I think, Europe has committed for carbon neutrality by 2050. My company, by the way, and many of my customers, we are committed by 2040 even. So we want to do it, right? It's not about the what, it's about the how. It's about the bureaucracy in the way. I mean, in my 5 years of being a CEO in Europe, there were 14,000 pages of regulations on our way, right? That's just too many. So I think we are calling for simplicity. Not even for money. I think funding is not that problem, because when we invest for 50, 60 years. We don't invest for one mandate, for one administration, right? So we need that visibility, that consistency, that dialogue. And I must say that's why I am optimistic that dialogue started with the new EU Commission. And the US has been very consistent in the way they protect their economy, and they're asking for more balance. And listen, for those people like us who have, big presence in the US, it's a good story for business.
Dr. Ilham, as always, thank you so much for joining us. Dr. Ilham Kadri there, the CEO of Syensqo. Now, we're just getting a little bit of breaking news, actually, an important one. Foxconn is set to pause the pursuit of Nissan as a Honda deal talks unfold. Now, this was a Bloomberg story that we broke a couple of days ago. We have an important interview also a little bit later on with Carlos Ghosn, who was for many years the CEO of Renault Nissan Mitsubishi Alliance. So this was a couple of days ago because of concerns. Our Craig Trudell, who's our expert when it comes to, of course, some of the cars, was saying, look, Nissan has a real problem in getting access to EVs, getting access to cars that then sell across the world. So we understand that there's this Nissan-Honda talks. We understood that Foxconn would be part of it. And now this Bloomberg story saying that Foxconn, for the moment, is going to pause the pursuit of Nissan. They are waiting to see how this potential deal with Honda plays out. So Carlos Ghosn, that exclusive interview coming out at 10:30 a.m. London time. Also coming up, Hungary's Viktor Orbán tells the EU to wait for Donald Trump before deciding on extending sanctions against Russia. We're live in Brussels with the latest next. This is Bloomberg.
I'd like to suggest to the upcoming presidencies to be brave. Well, this was our slogan for our presidency: "Make Europe great again." This is our only chance. Thank you.
Well, that was the Hungarian Prime Minister, Viktor Orbán, speaking at the EU Leaders Summit yesterday. Now, Bloomberg also understands that Hungary's Orbán has told EU leaders that he wants to wait until the inauguration of his ally, Donald Trump, before deciding whether to extend the bloc sanctions against Russia. Now, let's get more with Bloomberg's Oliver Crook. Ali, so how have EU leaders been reacting to these comments from Orbán?
Yeah, so listen, Orbán is sort of the usual disruptor in chief here for the EU on a number of different topics, but it gets sort of quite serious when it comes to this issue of Ukraine. And again, what we've heard from European leaders from the very beginning and reiterated again last night by Ursula von der Leyen, the main message today after this leaders meeting was full support for Ukraine as long as it takes. That means trying to get some more artillery, some more ammunition, these sorts of things to Ukraine. There is, however, a sense that the full support is already behind Ukraine, and there isn't maybe much more that they can provide. However, now the concern becomes, is there something that they will going to have to subtract from Ukraine, particularly in the form of these sanctions because of Viktor Orbán? Because how it works in Europe is that every sort of 6 months, these sanctions need to be unanimously by all 27 member states, be reiterated and brought back into force. All 27 EU member states, Orbán and Hungary is one of them. He is basically saying that he will not roll those over until the inauguration of Donald Trump, which will happen on January the 20th. The deadline for that rollover is January the 31st. So this makes a lot of sort of concern for European leaders here. There is some discussion about potentially looking at other levers they could pull. Could they tap those frozen Russian assets, not just the proceeds, the underlying Russian assets? That is something that Dombrovskis have sort of been thinking about. But throughout this entire meeting, Francine, it's really just been the sort of Trump show looming very large over this, and basically everybody in Europe right now a bit in reaction mode to Donald Trump.
Yeah, but speaking of Donald Trump, is Orbán really trying to position himself as the Trump whisperer?
Yeah, well, listen, Francine, I think he certainly has been for a number of years now, and it's a bet that has, ultimately in the end paid off, and it was quite a gamble for Viktor Orbán. I mean, when we get these tweets from Donald Trump, we got one at 1:08 a.m. Eastern time saying that basically he told the European Union that they must make up their tremendous deficit in the United States by large-scale purchases of oil and gas. Otherwise, it's tariffs all the way. The question is, when he said he told the European Union, Who is he talking to? Could it be Viktor Orban? Did he talk to Ursula von der Leyen? Is it Scholz? Is it Macron? This is really an open question. I think that on this specific issue, though, on oil and gas, the Europeans are already buying a lot more oil and gas from the United States. And frankly, since now we've learned in the last 24 hours that this Ukraine transit deal, so there's still about 15 billion cubic meters of gas that are flowing through Ukraine into Europe. That deal will die at the end of this year. Could that sort of shortfall, still 8% of European gas comes from Russia, could that shortfall be made up by LNG for the United States? And could that basically give Donald Trump what he needs in order to not impose tariffs here on Europe?
Ollie, thanks so much. Ollie Crook there with the very latest, of course, on Orban. Now, U.S. Secretary of State Antony Blinken downplayed concerns that members of President-elect Donald Trump's incoming administration are engaging in foreign policy before taking office. Now, he spoke to Bloomberg's David Gura about the transition process to his successor.
I want to be able to hand off to the incoming administration the best possible hand to play in all of these areas, in all of these challenges, because the world doesn't stop just because we're in a political transition. It's also normal that countries around the world want to hear from the incoming administration. They want to know what they can expect.
Now, earnings news, and Nike is down pre-market after the sportswear giant outlined its turnaround plan to reignite growth. Let's get more with Andrea Felsted from Bloomberg Opinion. Andrea, so what's going on at Nike?
Well, this is Elliott Hill's first big, public outing. He's set out a very sensible strategy, doing all the things we know it needed, more focus on sport, unleashing more innovation, reconnecting with the retailers again. But he also said he wants to take, Nike's own platforms, its stores and websites, much more to full price rather than discounting. At the same time, he wants to get rid of a lot of those unfashionable styles that they've been stuck with, and that's going to weigh on sales and profits in the current quarter.
So what happened? I mean, this is a tough task. How did it go so wrong for Nike?
So there were a few things that happened. It really, under John Donohue, it wanted to be a luxury brand. So luxury brands, they control most of their distribution. They sell very little through outside retailers. So that was Nike's strategy. So it sort of, disconnected its wholesale partners. So they didn't stick around. They filled that shelf space with other retailers on Hoka, Adidas. So consequently, they've all done really well at Nike's expense, and he's got to fix that. Then it didn't have enough new buzzy product. Adidas with Bjorn Gulden's got a real, merchant at the heart of that company. He figured out that these terrace styles were selling well, so he sort of, went into that and supplied more of them. They've become the hottest sneaker. Nike's just out of fashion.
I kind of want to know what's on your Christmas holiday, shopping list, Andrea. I mean, there's quite a lot going on with discounts. Are the next 2-3 weeks going to be really make or break for a lot of companies?
I think they are. Now, I think there's something really interesting going on. I think the American consumer's actually in a bit of a better state than we are. I think the election, whatever anybody thought of the result, it did provide some certainty. It's out of the way. Until recently, the stock market's been doing pretty well. You've got crypto on a tear. That should help US sales. Okay, the lower-end consumer is still under pressure, but you've got inflation, falling, hopefully interest rate cuts. I think Europe is much tougher. We've got, particularly in the UK, we've got inflation higher for longer. The measures in the budget, such as the increase in employers' national insurance contributions, that's got employers thinking about jobs, thinking about pay increases, thinking about their employment levels, thinking about hours. Now, one of the things that got us through the cost of living crisis was the fact that anybody who wanted overtime to pay for the higher bills, it was there. That's not going to be there this time. So I think for European retailers, it's much tougher. I expect the winners to do well, and I expect the US to have a stronger Christmas.
Andrea, thanks so much. Andrea Felsted there from Bloomberg Opinion. Now, coming up, Brazil's Congress inches closer to delivering weakened key provisions of a spending cut package. More on that next, and this is Bloomberg. Welcome back, everyone. Now, the conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, Brazil's central bank has spent $8 billion to try and stem the market rout triggered by President Lula's handling of the fiscal crisis. Now, for more on this, Bloomberg's Creighton Harrison joins us. Creighton, thank you so much again for keeping us up to date with the story. $8 billion, what does that get you? A little bit of market calmness, but not that much.
Yeah, at the very least, the real seems to have come back from its lows. It did close a little higher yesterday, so maybe they've staunched the bleeding for now. The outgoing central bank governor and the new central bank governor who's coming in both appeared yesterday and spoke for about an hour and a half, taking questions, and really tried to assuage the market that they do have the tools to contain inflation, that they're going to be able to do this. Of course, as we've been discussing, there's still this anxiety that at some point the central bank can only do so much, and what really needs to happen is the budget needs to be contained.
So Creighton, President Lula also has gone through massive surgery, actually, in the last couple of weeks. Today is his first day back where we're expecting to hear from him. What do we know about the relationship between him and the central bank?
Yeah, so as you've noted, he had a head injury that resulted in some brain bleeding. He had that drained. He is now back in Brasilia, supposed to be back today. And back at work, and he's supposed to meet with his ministers today in what would be his first public appearance since returning to work. So that's going to be a real crucial moment, because if he says anything to the press, if he says anything publicly, he could start things aflame all over again, or he could calm things down further. His relationship with the central bank is changing because, as I said, there's a change in leadership there. The new guy is his appointee, Mr. Galípolo, who is much more, has a much better rapport with Lula than the previous central bank governor, who was a Bolsonaro appointee. So that may help if they can coordinate a little more closely. I mean,
and your team on the ground has been speaking to a number of bankers. Who does Lula listen to?
Yeah, I mean, the situation is pretty dour there. I think people feel, that there's sort of at least an early cost here in terms of the foreign investment that they're worried may stop, the ability to invest in infrastructure and in growth, right? And capital expenditures may be limited these next few years as people try to send their money out of the country to wait out the rest of this Lula presidency and see what happens in the next election.
So interesting. Creighton, thank you so much. Bloomberg's Creighton Harrison, of course, who's in charge of our Latin America coverage. Later today, we speak with San Francisco Fed President Mary Daly on the Fed's decision and outlook for the next year. But up next, Bloomberg Brief. This is Bloomberg.